Three key measures of the health of the housing market are to be released this week amongst all the other economic data. Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. The first of those housing market metrics comes out on Wednesday with the release of the National Association of Home Builders Housing Market Index for June. The index, which measures sentiment among builders of single-family homes, is projected to come in at a reading of 45, which would be even with the figure from May. Currently, the measure is about 50% lower than the all-time high reached about 3.5 years ago. As with several other housing market measures, the NAHB's Housing Market Index isn't expected to show meaningful improvement until mortgage rates start declining. The following day, Thursday, the Census Bureau will check in with housing starts for May. Economists expect to find that new residential construction kicked off last month at a seasonally adjusted annual rate of 1.4 million privately owned units. That's 40,000 more than in April, but about 33,000 less than the long-term historical average. Rounding out the week's housing numbers will be the National Association of Realtors report for existing home sales in May, due to be released on Friday. The consensus estimate projects previously owned homes were sold last month at a seasonally adjusted annual rate of 4.1 million units, basically even with April's number. Currently, housing starts are running about 30% lower than they were 3 years ago. Also on Friday, we'll get two key updates on the overall health of the economy when S&P Global releases its Flash Manufacturing and Services Purchasing Managers Indexes for June. Manufacturing PMI is expected to come in at a measure of 50.7, which would be a decline by 0.6 of a point from the 51.3 posted in May. By staying above the critical level of 50, the index would technically reflect expansion in the manufacturing sector this month, although not by much. As for services PMI, it has remained consistently stronger than its manufacturing counterpart, coming in above 50 every month since January 2023. That's expected to be the case again in June, as economists project the index will land at 54.8, same as it did in May. Finally, Friday also will bring with it the release of the Conference Board's leading economic index for May. Notably, the index has increased only once in the previous 25 months. The metric is expected to have declined again in May, with economists forecasting a drop by 0.3 of a percentage point last month after it fell 0.6 of a point in April. Despite the LEI's repeated declines, the Conference Board abandoned its recession projection in February. However, the board still expects to see GDP fall to an annual growth rate of below 1% over the second and third quarters. That's it for now. Be sure to check back on Saturday when we recap what actually happened. This is Devlyn Steele for Augusta Precious Metals, signing out.